Okay. Morning, Bobby. Hope you're well, mate. Hope you like my praying gag. That's what happens when you spend too much time by yourself staring at computers. You think you're very funny. Well, I do. I tend to laugh at my own jokes all the time. All right. Welcome to the morning playbook. Hope we're all well. Looking forward to the weekend. Bit of an unwind after this week. Um, we'll just go through the basics. Well, the usual. We'll go through the intraday action for the markets that we're looking at. Only today, so we've got them here. Hong Kong, sorry, Nikkei is, oh, actually, must have been on the wrong one. So we'll go through those now, and then we'll just have a quick look at the US dollar again, that the movements from last night. I just want to reiterate what we were talking about a bit about yesterday on US dollar, because yeah, everything's well and truly linked to the dollar at the moment. Bit of rotation last night, I'd say, out of maybe rotate. I mean, it might just be a slight pullback on the Nasdaq. You know, they have a 5.5% pullback and 10% rally, but we'll see. So let's kick it off. We'll look at we'll look at the Nikkei. So I'm expecting potentially this, if it's going to get out of hand, it's going to blast through this 23,277 level, and I wouldn't mind seeing it. You know, what the markets like to do is flush. So it flushes high, goes low, flushes low, goes high, type of thing. And sometimes they just go straight through, and you expect it, and then people will be you know, looking for a buying opportunity, and it just goes blast through, especially with the Hang Seng, what we saw yesterday. So we're sitting there waiting for some weakness. We got it, but just the selling opportunity didn't pop up to what I like to see. I'd rather see something constructive, you know, a bit of a sell down, a pop up on the 5, give you a lower high, a shoulder to work off on the short side, but it just blasted down and found support, then started basing out. And I did have an entry short on it, which was pretty much over in 30 seconds, basically. Well, not even that, about a minute. It probably took. And that was, you know, for 50 points, but it was just getting hit, and you got to dive in, dive out. So it's actually very hard to actually to send some sort of alert on that. And it's not a constructive thing. It's just off a lower high, jam in. As soon as it finds, you know, someone willing to buy, bang, you're out, because you know that the market's getting extended. So I might actually put together a video if you're interested. We'll put together something, or we might just do a live stream about the entry setups and what I'm sort of looking at. So, you know, there's times when you're waiting for some sort of alert on our through Discord intraday stuff. You might know what I'm looking for, but it's hard to pop up for a trade setup because it's not working out nicely. But you can get an understanding of what we're looking at or what I would be trading. So we'll go over that. So yeah, with the Hang Seng, wouldn't mind seeing, what's my mouse? Wouldn't mind seeing if that's going to hold. We might get, if we get a lower high, I wouldn't mind seeing a flush at that level, like this scenario, then a lower high holding, and you can get a shoulder trade down. But the market's been fairly strong, even though the US was down on the, you know, the Dow was up last night. It has backed off since. It tends to stick those highs into the open, into the European Open too. So Europe was down. Again, this is what we've been saying. The US has got two directions. All markets got three, but the US, they got up or down. They don't really go sideways. So if they're going to go up, if they're going up, the moment is up, they'll just keep continuing until they get a massive sell-off type of thing. They don't tend to change direction too much. So the Dow is plugging away for new highs, new all-time highs as well. The S&P's moved to new all-time highs. So still fairly bullish. It's just the Nasdaq's finding a bit of pressure. So it's whether or not we get, there's no real reason just yet to the big sell-off into the Nikkei. So I wouldn't mind seeing, like I said, a flush to that level and see if we can get working from this level to this level, basically. You know, it's about 100 points or so. We can get something on that. Otherwise, if we flush down, like I said, I wouldn't be expecting too much weakness, so I wouldn't mind flush at that level, maybe, and then start to hold and see if we can get a bit of back and fill. By back and fill, meanings anyone that's been selling in there looking for a big sell-off is going to get squeezed back out. This action here, after that rally up, so that's the rally up you're looking for. This is contractive, and the anchor to that move up is still way down here. So it can contract to contract. That uptrend is not broken, especially it's on the 30-minute chart. It's not broken until this level at around 23,030 is broken. Okay, so you got to be wary. We're not in a downtrend. We're in a contractive phase, and that can blast off at any stage. All right, so just be wary of that. We'll go to the SPY. SPY, I think this level 60, 84 and 58 are going to come under attack on the open. Don't know which one yet. I mean, you never know with the SPY. It's going to blast up and then sell off. It can just go straight through. So ideally, around the level, what I'm looking for, it's going to flush through. I want to see it pull back. If it can hold the high lows like this, then go flush through. And then if you get a lower high to work into, a short from that offer to bid, offer zone to the bid zone down here. Or if it just goes straight down. If it goes straight down and starts to grind back up, then I'm looking for a short, potentially down and through. I mean, a lot of the times it's just going up and then stopping, down and then stopping and basing and coming up. So it doesn't give you, so you've got to trade. You're trading more of the edges, not like we say outside in, meaning, when you get extension moves like this, you're trying to trade it back into the average rather than from the inside out. Well, that was a good trade, but if you understand what I'm saying. Hang Seng, I'm expecting this level maybe to come into attack on the open, 25,350. For the Hang Seng, that's only, 80 points away. It can be done in seconds. So we might get, and if that flushes and then it starts to get selling, and you got to watch the numbers, especially we say read the tape, watch the tape, and you can do it on the CFD platform too, because you can see the bid and the offer chopping around. It gets more volatile when you hit around a level. So if it's going up, it's just bang, stop, bang, stop, bang, stop. It's not as, you'll see the change. I mean, if you watch it, you'll see the change, and you'll see the change if we start to get up at a level. Say you go long here and you start to get up here, and then bang, someone just keeps slamming, and they can't hold it up, and it keeps coming back, and it'll drop 10, 15, 20 points and maybe bounce back. So you can see the sellers starting to come in, and if you're watching that and you're long, you might want to get out, if that makes sense. So you'll see that that's the level where it could be some action, and then you just got to watch what happens after that, whether if it is going to be some selling, you get a shoulder. If not, you might get some coming in, and you might get it stall, support, and then see if it blasts through. Okay, so I'll be looking around this level at the moment. Now, for now, we just have to see how it opens. Maybe get the same sort of action, sell off down here. We might get it up, bang, straight down. We might get straight down action there. So we have to be ready for those sort of scenarios. But I think longer term, it's a bit of an each way bet. It's coming down here. If we drop that, it's heading south, so it's coming under pressure. You can see the MAs are rolling over. That's what I'm saying. If we can get to the 25,350 area, we're back to the MAs, and I would expect some selling pressure. All right. Dow, like I said, not really looking at the Dow. It seems to want to just keep grinding higher after hours. Keep ramping. It seems to be doing a lot of that. It's not going down at this stage. I think the Dow, like I said, is targeting new all-time highs on the index. So if that's the case, then this level is going to hold 28,330. We might get a bit of back and fill, sucker in a few sellers, then turn around and squeeze them out. And that's kind of the mood of the Dow. It kind of happens all the time. Let's go to just a few other markets. What am I looking for? Here we go. Look at that dollar move. So to recap on the dollar, we were talking yesterday. I don't technically believe, and I was reading it somewhere this morning. I mean, I'm not a master on FX, but it's the macro environment you got to look at. All right, so you got to understand what the macro environment is, meaning economies, all that sort of stuff. So we've been talking about the carry trade yesterday. So the carry trade is buying one currency to selling the other, and generally when you're buying that currency, you might be going to their stock market. So when they buy the US dollar, and we're talking about economies, okay, and inflation. When you're talking about the carry trade, you're not talking about the Nasdaq's doing good, so they're buying US dollars. No, not necessarily. They're buying, well, with the US they can, I guess, because it's a good place to put funds. It's the ones that's appreciating at the moment. But the carry trade's based around economies and inflation and what your expectation is for growth going forward. Now, I think a lot's been factored into the US dollar on the downside, meaning low interest rates, no inflation, all that sort of stuff. But now they're talking up inflation. That's what the Fed's basically said. They're going to try to combat. They're going to leave not just your 2% target, but an average, I think, of 2%, so it can fluctuate. But leave it open. And leaving open inflation, triggers growth a bit better. You're not going to cap it straight away with a rate cut. Rate increase, not a rate cut, a rate increase. But either way, they're sort of saying, forget about, we're going to be looking at inflation. That's going to be on our target. That's going to be on our radar, which is growth. Okay, so now, but what people are saying, that's not going to be good for the US dollar because they're not going to rate rise soon, meaning the US dollar is going to get sold off because it's not going to do as good as other economies. Say Europe, and England. I don't necessarily think so. I mean, the US is really a center, isn't it, of a lot of things. So I think it's more of the US dollars found the base, and you can see with this punch down to 92.50, rejected pretty quickly. That was on the announcement, and then it bounced straight back up, pushed back above 93, and it's hovering around 93 now. So that big flush lower has obviously got a few of these bears antsy and excited, and it's turned around and squeezed them straight back out again. So if you saw that move and it got bought straight back up again, would you want to go and sell it? Now, if you would want to go and sell it, good on you. I wouldn't. I really wouldn't. The way it keeps bouncing back up and keeps flushing off this 92 level, I'd be more inclined to just sit and wait and see. You want to see a nice lower high to sell into. Something like this, maybe like this action off a high like that. That's what you want to see. Push down, hold below, looking for more selling. I don't feel that we're going to go through 92.50. I think that's a major capitulation, and I can't see that their economy is going to be slower than any other economy. I mean, Europe ain't doing so good either. If the US is not going to do good, I don't think Europe's going to beat them to the punch, and then the carry trade will be buy the euro and sell the US dollar. I don't think that's going to happen. So that's why I'm sort of feeling that. I mean, a lot of people, especially in the markets, a lot of people talk their book. They say US dollar weakness because they're short, and they're probably looking to either keep that going or being able to find some liquidity to buy into. It happens time and time again with institutions, all these news feeds. I mean, we always talk about it in share markets. As a broker, you got brokers will talk their book. They're saying how good the stock is because they've either floated, they've got an IPO, or they own it. They're not going to say it's a great buy and try to buy it along with everyone else. So they've already bought it, and then they'll probably say it's a great buy. That's me being skeptical a bit. Bit of tongue in cheek too. But yeah, a lot of people talk their book, and I feel that saying US dollar weakness is talking your book because it has been weak lately. So that's why I'm expecting it's either going to be supported here. I think the idea still of stimulus is the one that's going to put pressure on the US dollar. And if they haven't come with an agreement now, and they come out last night saying they're still at odds, Democrats and Republicans are still way at odds on stimulus. So if that doesn't happen, off the off chance, like we've always said, if it doesn't happen, or if it happens a lot less than what the market's factored in, and they factor in, they don't wait for something to happen. They'll factor in. Everyone takes an opinion, because it is you're taking a side, you're bullish or bearish on it, and if you're right, you're right. You're wrong, you're wrong. So that they've already factored in stimulus. Now, if it disappoints, bang, you would expect a rally, to support it. If it comes out as expected, you wouldn't expect maybe it could keep trickling down. But I feel if it is factored in, it's kind of a support zone. And the fact that is, if they were going to say, $1 trillion, something would have happened already. But I just don't feel it's going to. And I think it could disappoint, which means potentially a rally in the US dollar. Gold get hammered. And look at gold. Gold's nervy. The way it is, it punched up, and that there's got nothing more. It's nothing more than just a flush at that level. Okay, don't read too much in that. Oh, the bulls and they just got sold into. No, or that was a news trigger, which is bullish, and then something else triggered it down. It didn't. It was just news was bearish. Market had to flush a level, flush them all out, get some buyers on the sideline, and then turn around and squeeze them straight back out with a rally, with a fall. Okay, so that was the 1950 level that we've been speaking about. Flush through, straight back down. So this, is under fire. It's still a US dollar based story. So if that's the case, it's not looking too crash hot. I mean, if we start to get a push through 1905, 1910, that would get me a bit concerned for gold anyway. But like I said, I don't think that's going to happen until we get something happen on the US dollar. If the US dollar is still range bound around the 93, give or take half a point, 0.5 or whatever, then gold will be similar. So that's probably generally what I want to cover off. I mean, look at the indices. I don't see. That's the S&P, into new all-time highs. It's still chugging along. That's not the world's best action up at these highs, and it is getting stretched. So there's probably going to be about a profit taken. It doesn't take much to trigger a profit taken. When you're at the start of a trend, and that say the same news comes out, nothing happens. When you're at the end of a trend, and everyone's loaded long, and something negative comes out, they can react to it quite quickly. It doesn't have to be much. Okay, if it's only minor, you get a reaction lower, then you get a back up by the dips type of scenario. So this news, that little sell-off was when they're talking about the stimulus. Okay, so Again, the markets are, it's just going to go up until something happens with stimulus. Now, it's going to be interesting because I still firmly believe that these markets, at their extent, they're not factoring anything with regards to fundamentals. It's purely, I mean, any vaccine news, look, they may support it, but then once they get through that, people get back to it. They have to get back to get people from unemployed to get them back into employment and to get them back working. There's going to be quite a few companies that will not be taking people back, and I think that might be a major killer. So I don't expect this to get back to full employment like the US is saying. It's going to be a long time coming. You would expect anyway, because as companies have been damaged, whether they've been using their own funds, money in the bank to run to keep afloat, or using government handouts to keep afloat. Now, government handouts have sort of been quite random. They're still waiting for more stimulus, and they can't. A lot can't keep going. There are industries that are booming, but as a whole, I think in the US and same would be in Australia, that there's going to be some companies that, I mean, there's been a lot of bankruptcies in the US which don't really get talked about too much, but there has been. There probably could be more. And if you're going to come back out of that lockdown and kick off again, I wouldn't expect everyone to get re-employed, if that makes sense. I know it sounds probably harsh, but I think they're going to cut a few costs, cut a few corners to try to get back on their feet. And that's going to hurt. So to get back to full employment is going to take a long time. And maybe that's what the market's going to contend with soon. Okay, that's probably it. Any questions here, guys, quickly, before I chug away? I haven't really looked at everything. We've got that's, still an uptrend. So that your three key US markets still an uptrend. DAX is, a very, not very robust, but it's kind of edging higher. That's more range bound over this period. Range bound, ticks out to the new highs before we get a big sell off. So it's not convincing. This was more convincing. Good rally, good sell off. Then started to hold this move up when it finally took out this high here. You can see not very far before it had a deeper correction. Starting to struggle here, not looking too flash, and they're continuing with weaker growth. This is the FTSE, so not really looking too positive at all. So that's what I'm saying about the US. They'll just keep ticking away on the upside, whereas other markets have shown a few cracks are appearing. Our local market, I think it's struggling around this zone up here, and that's why you're getting these sort of sharp sudden sell-offs. So if that's the case, we may be starting to roll. I think we've come out of this uptrend. You can see that was a basic uptrend. We've come out of that, and we're heading sideways at the moment. I mean, we could break up, but there's some action that's not too convincing at this stage, and we may just be stuck in this range. Maybe between 60.78 and 6,200. We'll see what today brings. All right, guys. PGH. What have we got on PGH? I'm out. I'm out of PGH. It's annoying. I got done at 232, and that was frustrating to see all that run up. I think we missed a profit target when it's sort of on that spike of 5 cents, and it comes back up. We made 2 cents. So I'm happy I'll reassess that. I don't like the way. For me, you got to realize a strong market shouldn't have a deep pullback. All right, when you start getting these deeper pullbacks after a spike like that, let's just go over here. I want to show you the last few months. So that was positive right up until you get this. When you get that rejection, I saw that, and when it's rejected all day, I was just waiting I thought, that's it. I'll tighten my stop, give it some room still, could be wrong, but I don't like that. When it rejects through the highs, you can see through that high, it doesn't actually finish below that high at 244. We finished at 242. So you've gone blasted through to 260 and finished below this high. Not a good sign. And it's the next few days where selling kept creeping in. So for me, the fact that it didn't hold sort of that 240 zone, I'm happy to be out. I mean, it could be wrong. It could bounce from here, pull back to the MAs, could just blast up again. But yeah, I think it's got some work to do. And if it does go to blast up, if it does some work, I think we get another setup. Simple as that. All right, that's about it, guys. Let's just see where the SPY's open. What the SPY's doing. Come on, SPY, what are you doing? Oh, there we go. We'll see how that goes. This level, we'll see if they can hold up. I mean, it might just flush, chop around here. I mean, SPY's pretty choppy at the best of times. So, all right, guys, we'll have a great weekend. Enjoy yourselves. Stay safe and just unwind. Any questions you may have, feel free to send an email to support@tradesetup.com.au. And it'd be great if you could leave us a like and help spread the word. And we're back in on Monday at 12:30. So no morning stream, just do one at 12:30. All right, enjoy yourselves, guys. We'll speak to you soon. Bye.